Really
I'm
good.
doing great.
Yeah, I'm
Excellent.
having a good Monday at least. Um,
Good. I like
yeah,
that.
yeah, getting into it definitely hitting some of doldrums, I think. But this week is going to be sort of like the final paroxysm of macro, as all the central bank activity is going to hit us. But it feels like
Right.
things are, at least in the equity market, things are kind of calming down a little bit.
Hmm.
Okay, Boris, I sent you a Twitter
Yep,
Spaces invite. If
and
you
I'm
can
looking at that.
link to that. And yeah, I'll do the search link now. Hold on. And I'll remind people in a second. But as you said, it's a huge week in the markets.
We're coming out this week.
Sorry,
If you
this
want to
always happens
see
here.
our
Okay.
charts.
Yep, definitely. We want to see some charts from
Okay.
the macro queen.
Yep, my IG handle, Forex Macro Queen. Spelled the right way because, those imposters are
Well, at least.
relentless. Um, yeah, we've got an incredible week in the financial markets. This is probably one of the busiest weeks we have had and probably will have for some time. And what's important about it is that this is a week that could shape trading and the direction for the financial markets and for currencies, not just for the rest of the week, but probably for the rest of the summer. So I think, it's, and maybe even longer than that. But it's, very significant, not just in terms of what's going to happen, but really in terms of what will or could happen going forward. So we've got, a very busy calendar with three central bank interest rate decisions from the Federal Reserve, the European Central Bank, and the Bank of Japan. And, there's a possibility of action or action from all of these three central banks. The market is already pricing in 25 basis points for the Federal Reserve and the European Central Bank. And it's a coin toss at this stage for the Bank of Japan. And in many ways, Corey, that is probably one of the most important rate decisions this week because they're so close to such a monumental change in policy. They haven't exited from their ultra easy monetary policy for decades, and they could be at the cusp of doing it. And if they do, it's going to be very, very significant. So we can break that all
Kathy, what
down.
what's the long term implication of Bank of Japan changing? Do we see so once they change now they're open to change going forward, or is it going to be a one and done type deal?
That's really the question, right? Because when you start a tightening cycle, the market's going to start to expect more moves beyond that. And so that's why the timing of the beginning of the tightening cycle is so important for the Bank of Japan because it sets off expectations going forward. Now, the Bank of Japan is a very conservative central bank, and they'll without a doubt, if they make a tweak, signal that it's going to be very gradual changes beyond that going forward. One does not mean more, but that's not what the market's going to think. The market's going to think, they're going to
Right.
begin, maybe they'll take a break, but they're going to continue just to bring policy and interest rates back more towards our normal level. And because, the euro yen is at its strongest level in 15 years, and dollar yen, is also very, very high, that if they actually deliver on changing their yield curve control, that's going to cause a significant amount of just short covering in the Japanese yen, which means that dollar yen, euro yen, all the yen crosses could move 2 to 3% in one day, followed by much more significant moves in the days to follow. Now, this is obviously very bad for Japan because a strong yen is damaging to Japan's export dependent economy in Japan. They're obviously aware of this. So they need to be very careful on how they message to the market and also to the timing of any changes.
But hasn't the yen weakened so much that they could afford a 4 or 5% depreciation at this point?
Yeah, I mean, that is true. But, in some ways it is true. They could afford 4 to 5% appreciation because consumer demand has increased for 15 months in a row. But then, so we see that in the numbers. But then you have a lot of, very focused Japanese economy watchers who say that the increase in inflation is not caused by an increase in demand. And that demand is still very much a problem in Japan. and that, even though Japanese businesses are making more as a result of the weaker yen, they're not translating that extra income into higher wages for the Japanese, which are therefore not translating into sustainable demand. So, you've got a lot of different opinions here. And you've got the numbers telling us one thing, you've got the experts in Japan telling us another thing. So it's really a tough call. I think at the end of the day, it tells you that whatever the Japanese do, is they're going to need to be conservative and nimble about it and make sure that they convince the market that that is the case. Because otherwise, it could be a very slippery slope because the yen could, move very aggressively. And as Boris pointed out, it's weakened a lot because it erase all of those of that weakness quickly as well.
Right. And Kathy, you've got great intuition. What is your gut telling you what's going to happen?
I think this is really a tough one because if you ask me this under Kuroda's governorship, I would say that there's a very high chance of a surprise because they love to catch the market wrong-footed. But this is a brand new BOJ governor. His first meeting was the last meeting. And the last meeting he said, we got to be more conservative. He surprised the market with his dovishness. We've got to watch how things go. So, his credibility is at stake too. So it's very hard. This is only his second meeting. So it's very hard for me to say which way he's going to lean without seeing a little bit more of a track record.
Right. We have no history for the gentleman.
Exactly. If he shows that, okay, he's flexible, and that he's as prone to surprises as his predecessors, then we know what he's like. If he's doesn't do anything, he focuses on being conservative and credibility, and focus on his credibility, then we also get a sense of that. So I think this meeting is very telling about his personality and what could come going forward. So this particular time around, it's very hard to tell for me, Corey, just because he's brand new at the job, and he's only one meeting in, so I don't have a good feel about which way he's going to lean.
Got it. So let's say, for example, he is dovish and we don't make any changes. What do you expect to happen? Because you said there is a little bit of a price in that they're going to make a move here. Let's say we get nothing. What does the market do?
I think it's still going to be a disappointment. I think that, there is, because it is a close call. That's going to be nothing. And many people believe it's going to be nothing. There's been a lot of reports saying that maybe it's nothing. But I still think that you're going to see yen weakness because it's going to reinforce the fact that they are going to be sitting on their hands for as long as possible. But Corey, the timing is also very important, right? This comes after the Federal Reserve rate decision. So they have the luxury of seeing what the Federal Reserve is going to do. We have the luxury of seeing what the Federal Reserve is going to do. And ultimately what the Federal Reserve does is much more important than what the BOJ does for dollar yen and euro dollar and almost all currencies. So I think it's going to have a knee-jerk weakness, but then it's going to go back to whatever the Fed ends up doing or saying.
Got it.
So, then we have to think about, what is the Federal Reserve going to do, right? Because that's really the premier meeting this week. And the market's fully pricing in a 25 basis point rate hike. We said that last week when we met. Nothing has changed this week. And, so the key is the guidance, right? The data that we've had so far did not cast doubt on what they should do this time around. But there's a lot of doubt as to what should the Federal Reserve do for the rest of the year beyond July. Because the Fed Fund futures, I'm happy to share what Fed Fund futures are doing right now.
Certainly. Yeah, last time we looked at it, it was kind of all over the map. There really wasn't any clear direction on the Fed Fund futures.
Yeah, and for those of you that are on Twitter Spaces, make sure that you click on this YouTube link because I'm showing my screen here and we'll show more screens later. But this shows you that we've got a 98.6% chance of a rate hike. So pretty much guaranteed done deal. The market expects this. The September, we're looking at pretty much no change, only 15% chance of a follow-up hike. By November, those odds increase to about 30-ish%. And then by December, they still sit at about right under 30%. So what that tells us is that the market's pricing in one rate hike this week and nothing really for the rest of the year. So, it's fair game. It means that, if, it's kind of reinforced by data because data has been weaker. It's been enough to leave the door open for hike this month, but it's weaker for the rest of overall. So what this means is that if the Fed raises interest rates and Powell remains hawkish and doesn't say anything about inflation slowing or demand slowing, or but focusing on how inflation is too high, and that keeps expectations for another rate hike this year in place, that's going to send the dollar higher. However, if he in any way, shape, or form sounds wishy-washy and says that inflation is slowing, we're watching it, we get he maybe points to weakness in consumer demand, or he says anything that suggests that they're less hawkish and less optimistic on the economy, then we're probably going to see a much more significant pullback in the US dollar. Now, last time they met, we had the dot plot, and the big takeaway from the dot plot was that there were 2 more rate hikes, that Fed policymakers are looking for 2 more rate hikes this year. So the Fed officials are looking for 2 more rate hikes this year. Fed Fund Futures is not showing 2 more rate hikes this year. So there's a clear misalignment, and that misalignment presents opportunity, and that opportunity will come from what Powell says or doesn't say when they meet this week.
Hey, Kathy, if you would just give us, for those who don't know your trading style, how can we play the announcement?
Okay.
Are we going to wait for direction? Are we going to front run it?
Yes, very good question. We're definitely not front running it. Sometimes I like to front run rate decisions if I've got a very strong opinion as to what they're going to do. I mean, obviously, I think they're going to raise interest rates by 25 basis points. I have a very strong opinion about that. But I also know that that's not what matters this month. What matters is the press conference. So with the Fed as well as the ECB, the best way to trade this is reactively. There are 2 opportunities. One is my favorite opportunity, which is to wait for the next trading session. So like the Asia trading session that follows, especially with FOMC, since it's so late in the day. What we would do is just wait for the dust to settle, wait for the market to determine its takeaways from the rate decision. And once it's determined its takeaways from the rate decision, then what you do is you ride that move into the Asia session, into the European session, and basically leveraging that opportunity. The other way is almost an instant reaction. You're trading more reactively, and you're trading basically you wait for the Fed press conference, you should wait about maybe 20 minutes. Everything that is generally important to say is said in the first 20 minutes. Then you wait for that candle to close, the 5-minute candle, 20 minutes after to close. Make sure it's either positive, negative, and then ride that move as well. Bottom line is you want to trade it reactively. Boris will be live trading it, some of these rate decisions, and he does a really fantastic job. And the key really is to trade it reactively. So we live trade it reactively in our live trading room, and then we send out trade ideas on it in the Asia session using the zip trading signals.
Right. If you have
Awesome.
the need for speed, you trade with me. If you want more positional stuff, you go with Kathy. I will say one sort of a red warning flag on the Asia session follow-up. It's a great trade. It almost always has, especially if there's meaningful data to take away from the presser. But Asia always plays market makers always play little games. So I think the opening of Asia trade till about 8 o'clock, and this is why Kathy almost never trades until after 8 p.m. New York. Don't jump on the bandwagon too early, because what they try to do is to misposition. So let's say, I don't know, it's dollar bearish, right? What they're going to do is they're going to pump the dollar up to about 8 o'clock in the morning, Tokyo, which is 8 p.m. New York, and then they'll start the continuity trade. So just be careful not to jump too ahead. But generally, yes, it's a great...
The old first move's the wrong move.
The first move is the sucker move, usually, to get people committed to one way, and then they're going to pull the rug underneath you, because they're just looking for as many orders as they can possibly get into the right direction, because they know they're going to have a whole bunch of buy-side orders from money market firms and from large banks and from everybody, from corporates. So they know which way they're going to go. So they want to get it the other way so they can get the best prices possible.
So how would you trade it reactively in your live trading room?
Reactively, first of all, remember that I'm really focusing on the indices, which is a completely different animal to start with, because what's bad for the dollar is good for indices. If he's going to be dovish, that's going to be super, super bullish NASDAQ, because NASDAQ hates high interest rates. So there, like the great trades there is as usually we do with our bounce trading, we want to see where it is positionally on the chart, at the above the midpoint of the day or below the midpoint of the day, and then if he's positionally one way, you just want to buy the dip or sell the rip. Like in other words, if you think that there's a fundamental view that's relatively strong, any kind of a counter trend against that is going to be a great entry point for a pop back up. Conversely, any kind of if you think this is a super uber bearish conference where he goes, we are in no way, shape, or form stopping our interest rates. We think I don't think he's going to say that. I think with Kathy, he's going to walk a very fine line. I think they're pretty much done. The market is properly anticipating him. Data has not been in need of any further rate hikes. You could make the argument that this hike is unnecessary at this point. So I think he's going to be cautious not to get, but at the same time, he doesn't want to lose credibility as an inflation fighter. So he's not going to just back up and say we're done. He's always going to leave a little bit the market guessing a little bit. But generally, I think it's going to be a dovish conference. But I've been wrong. Sometimes he's come out.
So he's
no,
looking for there.
no, he's not. I think he's definitely not going to want to say that, so the market takes him seriously for the next couple of meetings. But I think he's not going to say like something to the effect of, we see 2 or 3 more rate hikes down the future. We see the battle against inflation not over. I don't think he's going to be super hawkish. The data, just doesn't support that anyways. Inflation, month-over-month inflation data is actually starting to turn negative. Other things really come down. Supply chains have all been right back to where in employment, I think is definitely going to see a slowdown a little bit here. We've had very, very robust employment. It's just natural that we're running out of people to hire. There's just no more people left in America to hire. We're like record low unemployment. So hard to see where he's going to get more and more dovish, more like robust data coming at him. So I think I think the market has it right. It's this is a rate hike to kind of put a period on the cycle, and assuming we don't have any supply side shocks, meaning huge spike in oil, Russia decides to nuke all of the wheat fields in Ukraine, or we get to some kind of a massive spike in commodities. I think we're done with inflation. Wages are not growing at a hugely inflationary rate. And again, this is I've been arguing this forever. Like everybody always makes this analogy that, this is like the 1970s, so on and so forth. And it's not, because we don't have any unions, and so we don't have any labor control. We're starting to get, there's this UPS strike, which is obviously going to be big news, and we should be watching that because that's probably a good telltale sign for labor. But even if UPS, wins a 5% wage gain,
what's the deadline on that? When's that strike going to be resolved?
Well, they're hoping to avoid it, but they're talking about it. Like I think it's next week or this week. I mean, it's all it's coming to a head. They're trying to avoid the stoppage. But they have 300,000 workers, and it's sort of like the most seminal labor negotiation we have. Just because there's no more unions left in this country, so it's very difficult for labor to negotiate en masse. That was the story of the 1970s. In the 1970s, price levels were going up, and labor had the power to increase wages in concert with price points. Now it doesn't. So that you don't have that kind of wage push inflation, and we haven't had it. So
interesting.
I think it's generally going to be a much more modest cycle this time. Yeah. So as far as just trading it, it's all going to be it's all going to be, we're going to have to see how the markets react, and the markets very often do the exact same thing in equities, but just wrong move first, second, right move second. A lot of times they'll just get hung up on 1 or 2 words that he says that can sometimes turn things around. Generally, the interesting thing about equities is whatever is the move post-conference, it almost is always reversed on the market open the next day. In other words, however the market was feeling post-conference, unless it's shockingly surprising, it's almost always reversed the next day. So you got to play it both ways. you know.
So we do have one more interest rate decision to talk about, which is the European Central Bank rate decision. And for those of you, there's a bunch of you in Twitter Spaces. Please click on that YouTube link because we are, we're live streaming on YouTube. So with the European Central Bank rate decision, we also have the market looking for 25 basis points. But this morning we had, pretty weak Eurozone PMI numbers. Eurodollar was hit a bit off of those economic reports. And, last week we heard from an ECB official who said that, yes, we need another rate hike in July, but anything beyond that is probably going to be damaging for the economy. And so that is what, the market is kind of trying to figure out, because ECB President Lagarde is an uber hawk, and she's been really drumming down the need to fight inflation. And at every meeting, she's been talking about inflation being too high. So is she finally going to let up, because the inflation data is slowing, and inflation is no longer as high as it previously was. So that's also going to be very, very market moving for the euro, because the not the actual rate decision itself at 8:15, but the 8:45 New York Times press conference is going to reveal a lot about whether the ECB is going to be continuing to raise interest rates as the Fed stops, or they're going to slow down, alongside the Fed, or whatever combination that we have. So, Eurodollar, Corey, is obviously the most actively traded currency pair of all of the currency pairs. Mm-hmm. So with double rate decisions, with double uncertainty, with double guidance that the market is really sitting at the edges of their seats for, I think it's going to be a huge week for the Eurodollar. And whatever comes out of it, I think could end up being a very durable move.
Excellent, Kathy. Do we have anything like the Fed Watch tool for the ECB?
Yeah, so people like to look at Euribor futures, but those are not as readily found. You can Google it. Google's our best friend, right? Here with my mouse.
Sure.
I'm sorry, I'm on the wrong screen. So you can go to Google. Sorry. And then you can type in Euribor futures or Euribor rate. And the Euribor rate basically gives us a indication of where things, it kind of gives us an indication of where things could go. So, right now, Eurozone interest rates are, basically at about 3.5%. And so the Euribor, I think you just look at the change. The market's pricing in 25 basis points for the next 3 months, and then maybe a little bit more beyond that. When we look at Euribor, it's kind of like LIBOR, but you just have to look at how it's been changing on a regular basis, whether it's been going up or down. And so, let's see, but it's not as clear and transparent and easy to read as the CME Fed Fund futures.
It takes a little more skill to sort it out. Now, we haven't really had a surprise from Fed Funds futures. It's pretty much been spot on. If I recall, the ECB did give us a surprise. Didn't they give us a 50-point raise at one of the previous meetings a couple months back?
Yeah, it was a while back, but, I don't think that's on the table for this meeting at all. Interest rate futures are a reflection of sentiment. So that is why, oftentimes it's on, because in some ways central banks don't want to, they don't want to have too much of a surprise unless they feel like it's absolutely necessary, because the best case scenario for a central bank is you raise interest rates, nothing happens with the markets. So they try to manage expectations appropriately. And that is why oftentimes they've managed expectations and given the market, what they think the market should take out of it.
Thank you. And then how about all of our periphery, oil, gold, Bitcoin? How does that play in? What are we looking for in relation to these Fed meetings?
Well, I'll let Boris touch on that because he watches those markets.
We had We had a couple interesting calls in Trader Fest that I thought you might want to share with you guys. Should I
Oh
show you
yeah,
my
absolutely,
screen?
absolutely. I'd love some Trader Fest highlights also.
Well, Boris, do you want to? Is there anything they can point out on the Trader Fest website? Can they grab the old videos, register and grab the old videos from there?
Um, yeah, let me see if I can. I think if you actually, you can still go to thetraderfest.com,
Yeah.
www.thetraderfest.com.
Why don't you go ahead and show the
Oh,
web page?
sorry. Let me. I don't have this. My screen is not up. Let me share
I'm
my
gonna
screen.
stop sharing. So, for those of you that missed out, we had a huge event this weekend, the traderfest.com, and we had, 6,000 registrants, and we had
Wow.
some, really powerful speakers who gave a lot of great information, their insights. So the website is the Trader Fest, Trader, and then FEST.com. And there's a lot of great stuff. And for those of you that are joining, I encourage you to move on to the YouTube stream if you want to ask questions about the markets this coming week.
So, we're cutting the videos now, and I think if you put in your name here, we'll be able to. It still gathers the information, so you'll be able. Even obviously, you can't watch it live, but we'll be able to send it out to you on an archive, and you'll be able to see all the archival footage of all the
Oh,
information,
great.
which is really really cool. I mean, there's some really really amazing trading advice, not just immediate trade calls, but some amazingly interesting trading advice of how these people trade their own accounts. That I learned myself, quite a lot about money management out of them. So there was a couple of calls here that I thought was interesting. Perhaps the most interesting, sort of most aggressive market caller was Francis, who basically, Francis Hunt, the market sniper, who basically made this very potent argument that he thought gold was going to break out, he thought dollar was going down, and which is something very unusual. It's really out of consensus. Nobody thinks gold is going to rally. But he did think, and he thought that oil actually was a little bit modest up, but not because he really thought there was going to be a much more serious slowdown as we go forward. So he's got a very libertarian bent. Oh, he also really liked crypto, and he thought crypto was going, Bitcoin was going to start to break out too. So these are very much out of consensus views. But what I've learned from past Trader Fest is usually those are the ones where you have the kind of the least comfort with the view is the ones to watch, because they tend to have, especially gold to me, that's something that nobody's really watching. He felt 2,500 was going to be the first target before a much bigger breakout.
Was there a reason for his argument?
Yeah, the usual libertarian stuff. It's just the end of fiat, market going down, blah blah blah. But he also is, he's also a very very good technical trader. And he was basically showing how there was all this, technical formations. One of the very cool things, by the way, if you register, this is a very good reason why you want to register. Not only are you going to get access to all the videos, but these speakers have shared some really interesting resources with me. And one of the things that Francis has shared with me is the patterns that he looks for, both on the bullish side and the bearish side. That reveal these incredibly explosive moves. And he was seeing that kind of pattern. I can't describe it to you because I have to actually literally show you those patterns, and that's why you want to register, because if you do, then I'll be able to send them out to you. He's going to share them with me, and they're very very cool in terms of you really can see these three small waves and then a big breakout on the chart. He's a big pattern trader, and this was a big thing that I learned out of him.
Boris, this is stuff that we kind of unique. We haven't seen this stuff before, or is this a kind of an Elliott wave?
The way the patterns that he had, because what he did is it's actually 4 or 5 very similar looking patterns. They are the same pattern, but they look very different in different formations. Some of them are convex, some of them are concave. Again, very hard to describe. Once you see it, you go, oh my God, yeah, this looks. But if you saw them, they look, without having context, you would have no idea that this kind of a pattern could have huge multiple R, permutations where, he was showing that he had bought XRP without even knowing the news about XRP, right ahead of it, based upon this pattern. You could see it, and then it just of course blew up. There's a 10 to 1 trade for him. So he's seeing some similar kind of ideas, and I think if nothing else, I'll send you that resource, and it's a really good. If you're a pattern trader, these are really interesting patterns that that are very well classified, that are unique.
Interesting.
And he's actually is interesting that every trader is different. He's a guy who thinks every indicator is a waste of time, whereas a guy like Tom Bassa, who's a market wizard, been managing $1 billion for like 25 years or 30 years, uses nothing but indicators. So it just goes to show you that almost everybody can make money as long as they have an intelligent system of trading. And all these guys really shared some very interesting ideas. So really, really worthwhile. If you're at all a trading aficionado, if you're not just a degenerate gambler like I am, you will learn a lot, and you will have some really, you walk away with some foundational ideas that could radically help your trading. So definitely worthwhile.
What was the overall sentiment of where the markets are going? Was there any? I know there was some dissension from. Was there a consensus among the group?
Honestly, so almost everybody is a super short-term trader. So everybody was like, the market is going where I'm going to go where the market is going now. I mean, Austin.
Right. Exactly.
Like nobody had any strong macro calls, and Tom, who's obviously a very, very well-known money manager, made this great point of don't let your personal bias, or like he was basically saying, don't let your political views, and he meant any kind of political views, whether if you're a libertarian or a conservative or a liberal or whatever, don't ever confuse your view of the world, how you think the world should be versus how the market is. And I thought that was really, really interesting. Like he's basically saying, I have a view of the world as a citizen, and I have some political beliefs, and I have all that stuff, and that means absolutely nothing in how I view the market. And anybody who makes those,
Interesting.
replace those two things, inevitably loses. So one of the great things I thought that everybody at the show had is they had a complete dispassion from their personal views to with price action. It was all, honestly, everybody who is successful trades price action, one way or the other. There's a million different ways to do it. Robbie showed some really interesting narrative stories, some great AI stocks that he traded, including, NVIDIA, how you would trade NVIDIA and Meta and everything else, and also shared some really interesting new AI websites that are very valuable for traders. So that's really worthwhile watching. I'll send all those resources as well. Austin had some great habit. He's got this great habit tracker spreadsheet that he shared with us, which is very, very useful for anybody who's trying to create good, best behavior habits.
And for those of you that don't know, just to reiterate, the website is thetraderfest.com. I don't know if you can show your URL there, Boris. You're just showing your middle screen, or maybe go to the very top of the screen.
Yeah, the trade is www.thetraderfest.com.
But if you go to the top of the screen, you'll see the actual title. Trader Fest. So it's the Trader Fest. You see the logo on top.com.
Yeah.
Excellent.
We have a question. Sorry.
Go ahead, Kathy. I'm sorry.
We have a question on YouTube. Hey guys, do you think Eurozone PMI data can affect stock futures? I actually thought we might see a little bit more bullish momentum from gold given today's Eurozone PMI data. The Eurozone PMI data was weaker, but this is Eurozone PMI. This is not US PMI.
Wait, why would he think that weak PMI would be positive gold?
Well, I think he's probably negative global growth, which is positive gold.
I don't know.
At the end of the day, this is Eurozone PMI. It's not US ISMs or anything like that. And so it's far less market moving for the US markets. Whereas, what are DAX doing right now? Let's see. The DAX is kind of flat. It probably was a bit more negative for the DAX earlier today.
I've actually, by the way, I don't trade the DAX. The other thing that was kind of interesting was sort of my own personal takeaway, and this is maybe useful to everybody who's watching. Everybody talked about the idea that you got to trade to who you are, not to what everybody tells you to do, right? And one of the things that I realized is, like one of the great differences between Kathy and I is that she's an amazing multitasker. Like she can do 5 things at once, no problems. She can cook dinner, trade dollar yen, yell at her husband, yell at me, and then, come back and, put the kids to bed. I'm a type of person that I realized I'm a 1 or 2 instrument type of person, right? So like I cannot, I have amazing, Kathy knows I have 1,000 strategies, right? I mean, I have a strategy a week that I invent, and then I love to do it. But what I realized is that if I'm focusing on 55 different things, I'm not good at anything. I'm just not that type of person. I am a very serially focused person. So I used to trade DAX, US 30, and NASDAQ. And um, I can't anymore because it just like, mentally the watching the DAX has been very, very hard. However, what I did notice, just even though I'm not trading it, is there's been a massive divergence. There used to be DAX and NASDAQ used to trade really, really in sync. Where if DAX is up, NAS was up, and they were both in confluence. There's been a little bit of definitely divergence because that's basically showing, I think, that Europe is really having a hard time in growth, and that the whole big DAX recovery that everybody was hoping for, it's kind of run its course. The PMI data today was horrid. I mean, 38 on PMI is just that's like Japanese heart of deflation type of data. So that's one of the reasons why I find it very difficult for ECB to hike rates. However, the other thing that came out of the show that was fascinating was Nick has like this tool that is a positioning tool, and he was talking about the fact that 70% of retail FX traders are short the euro. So combining that with Francis's dollar bearish move. Remember the dollar index. He was very bearish dollar index. Dollar index is 45% euro. It kind of suggests that we may have another 3 more handles in the euro. We may go to 115 in the euro before that story kind of peters out. So that should be for those of you who are kind of positionally trading. Those were interesting really takeaways from the show.
Interesting.
Yeah.
Boris, can you give us a kind of what was the consensus view or anything really cool you learned on the AI front? I know that was the kind of gist of the show. Give us a couple takeaways from the AI side.
So I think the TLDR, as the kids say on AI,
Absolutely.
was that it's an amazing teacher. It is a very, very useful servant, but it is in no way, shape, or form a substitute for doing the work, which is what a lot of people, want to believe. I want the robot to do all the work for me. I'm just going to sit back and, let ChatGPT make money for me while I get passive income. Not the reality, And I think nobody actually kind of expressed that better than Tom Basso, because Tom is actually, I don't know if you guys noticed, before he was a money manager, he was an electrical engineer, and he's a very, very good programmer. Like, he was the first programmer to automate almost all these strategies. So he understands databases better than anybody at the show. And his whole point was like, listen, I know it looks like magic, it seems like magic, and it's incredible what it does, but it's nothing more than just a massive database, and it's just doing database lookups, and it's just this massive Google. It's just a more advanced version of Google lookup, and you cannot, in any way, shape, or form. It's very, very good for like answering the basic questions or answering the analytics, but it's in no way, shape, or form going to create the winning strategy for you. Basically, the thing about ChatGPT, if you want to sort of understand it, it's really, really great because in consulting, like in McKinsey Consulting and CVG, like all the big consulting firms, they have something called best practices. Like, what do consultants get paid money for? They get paid money for by doing survey of what everybody is doing, figuring out who's the best company, what are they doing, what are their best practices, and then codifying that into like a little, $10 million project that they do for somebody else. It's like, you imitate, why is Apple so successful? Well, here's the secret to their success. They have all these processes in place, and that's why they're so successful. Now imitate that, right? And that's what companies pay them money for. So ChatGPT is basically every man's consultant. What it does is it goes out onto the web, finds the best practices of trading, of writing, of this and stuff. It's programmed. It's basically, takes all this enormous amount of data and person the best idea, the best stuff, because it's programmed, to win it out, and then it produces, the answer. That's why it's really, really good. If you've ever asked it, tell me what are the 10 things I should watch for as a beginning day trader, and it will give you 10 very logical, steps of things that you need to avoid, and that's why it's a great tool, and you can replicate that in a million different domain expertises. So that's where it is. On the other hand, if you say, make me $1 million program, it's not going to do that, because
Right, of course.
the whole idea is it's not creative. It's not. best practices is about imitation, right? It's about imitating the best guy out there. It's not about inventing something new that's going to make you money. Because in the markets, you can invest, you can copy, but in order to make money, you kind of have to innovate a little bit. You have to be a little bit different. So that's sort of like was the takeaway from all of the AI stuff. That having been said, there's just enormous. I mean, the point is, if you start using AI, you will be 1 out of 1,000. You'll be ahead of 999 other traders in the world, all of whom are going to take, perhaps months, most likely years, some of them decades to catch up to you. And so you will have huge advantage by just by just even learning. Like if you're a beginning trader in a prop firm like Surge, and you like trading, but you really don't know much about it. In 2 hours, ChatGPT can teach you more about technical analysis, fundamental analysis, and even Bard, by the way. Bard, which was horrible. We talked about all of this at the show. Google's version of AI has gotten a lot better. And, it's gotten, a lot better. Now, what we've done and some of the other traders have done in the show, where the next step all of this is to use these AIs to actually create trading strategies, And one of the cool things, that if you guys come trade with us is I'm using these trading strategies that I created with ChatGPT that are making money. Now the point being is that it was my idea. The robot told me how to write the code. It's not like the robot said to me, "This is the trading strategy you need to do." I had the idea, but this is the beauty of AI. It can make your ideas come true to life, and that's an incredible superpower. It's the difference between just having an idea to having a business, and that's really, I think, was the cool thing of the whole show. So people had really, great interest. We're going to obviously do a lot more follow-up. There's a lot more. I have so much content of the show that we're going to distribute. That's why sign up, because once you sign up, I'll be able to.
Absolutely. We'll put the link in the video description as well. So anybody who wants to access that, you can find it in the description. That's a great takeaway. So, I mean, that's kind of what you've been alluding to for weeks. But it's a very nice. Like you said, TLDR.
TLDR, right. I'm staying hip. Much to the horror of my children. Right? But yeah,
that's great.
But it was a great show. Really, really a lot of fun. Tremendously interesting ideas. I'll say one thing. I'll say one thing that that Francis said that just blew my mind. Like it had nothing to do with AI or anything else, but I thought this was really, really brilliant for its simplicity. He said, "I'm not a algorithmic trader. I look at patterns. I make decisions of how I want to do the trade. I want to do everything else, except for one thing. I will not allow myself to determine the size of my trade. The one thing that I will always force the computer to do is determine the size of my trade," which is, if anybody who's traded, and I'm sure many people who are listening to me right now who've blown a few Surge accounts know that the reason why you blew the account wasn't because you were wrong on the market, or because you didn't analyze the market, or your trade was wrong, or you didn't have a strategy. You probably had all of those things more or less okay. The reason was because you over leveraged yourself, because you oversized yourself, and because you couldn't help it. You could not help it. You're like, "Oh, I missed this trade. I got to double up. I got to triple up. I got to quadruple up."
Right.
And I thought that was such an interesting idea, that the one thing that you should really algorithmically determine 100%, and of course, the computer is very smart. It can say how much money you have, how much risk you have, what's your stop parameter. It can calculate all that within a microsecond. First of all, that's
Does
very,
he have a tool that does that, or is he?
Well, we
is
actually
it just general?
we actually have a tool at BK that will do that for you, that we created with our friends at ACAP, our favorite broker, and that's available to anybody who's an ACAP account. So we'll be happy to share that with you. But yes, I mean, the point is, it's a tool. You can make it into a tool. But I thought it was more interesting the fact that he absolutely relinquished sizing to the computer, because he understood how that is the make or break decision in every single trade you do. And
Nice.
and at least for somebody like me who's very impulsive and compulsive, it was a really interesting idea, because I'm sure many people are listening to that, in terms of being able to control your worst instincts by letting the computer.
Trading takes away your revenge trading aptitude.
And you see, the computer doesn't have revenge trading. The computer
Right.
just simply says, "Okay, you're 25 basis points trade on this thing. works, it doesn't work. If it doesn't work, we're going to go 24 basis points, not 55 basis points, but 24 basis, because you're smaller on your account. The computer is very methodical, and that is a difference in many ways between long-term success and blowing out, which we all have a tendency to do. So that was like a really interesting
Right.
takeaway, because it was nothing to do. It was sort of like, here's a guy who does not really use computers to a large extent, but will absolutely use them for the one essential element of trading. Yeah.
Interesting. Very
Yeah.
interesting. Boris, before you stop sharing your screen, I know we like to end with Kathy's macros, but Boris, could you bring us through gold, oil, and
Sure.
Bitcoin real quick?
Sure. Let's look at charts. Just give me a second to get off the
Yes,
the
certainly.
1 minute chart. Okay, let's see. It's going to take a sec. All right, so this is we're 1 minute chart. So we'll get off my ADD addled brain. I'm going to go to the dailies, and I'm actually going to let me just take off the.
Well, Boris, what are these things that we're looking at? What are these symbols and close and buys?
They're not important for what I was going to say. These are this is as everybody knows, this is my bounce trade strategy, which we day trade every single day in our room. And as a matter of fact, thanks actually for prompting me, Kate, because this is interesting. So what we do in my day trading room is actually we call it pass the prop test. In other words, we create strategies that help traders pass their prop tests. And because I have a high tolerance for boredom, we don't have just one strategy. So to give you an idea, using bounce strategy, the whole idea of passing the prop test, just kind of a general rule, is you got to go 10%, right? Make 10% without losing
Correct.
5%. Everybody's rules are a little different, but that's really Surge. I mean, Surge just make 10%. Don't lose 5% in a day. You can have 8% if you're going to be there's, and really almost everybody is a no difference. It's a distinction without a difference. You got to make that 10% without really drawing down to 5. That's much more difficult than people realize, right? And so 2 weeks ago, we took an account, $100,000 account, and we ran it to 110,000 in 2 weeks. Very, very aggressive trading. Very, very aggressive trading. But it was one of those kind of things where we used this strategy, high size. But it was one of those kind of things where one swerve off the road. If we had a couple of bad days where the cycle didn't resolve, we probably wouldn't have been able to make it. So it's definitely possible. We proved to ourselves that if you want to pass the prop test in 2 weeks, you could do it. But what we're trying to do now, which is much more interesting, I think, is I'm calling it pass the prop test in 10 weeks. And what that is taking it in micro size modules. We're going to try to make $1,000 a week, which is 1% a week, 10 weeks to get us there. That obviously allows us to trade micro small. One thing I can't,
very conservative.
I can't. What's the word? Less than a guarantee, but better than assurance. Whatever somebody believes. I am very, very confident that if you use this approach, you will survive every drawdown there is. Like, in other words, our drawdowns are 50 basis points. They're not even, we have $5,000 today. I mean, you can look at I'll show you my account. Okay. Let's see if you guys can see my account. Oh no, it doesn't show. I can't show my account because it's only showing my too bad. It's only showing my browser. Anyways, let me just tell you what it is. Trust me on this. So today we made $257 on 100,000, so about 20 basis points, and the worst drawdown I had was $40. So it's an $100,000 account. That means I basically I can do this day in. So the whole idea
Very,
is
very comfortable for anybody who had any kind of
right.
risk tolerance
Like,
problems.
literally, we're trading we're trading 1/10 of a lot on a $100,000 account, which means my trade is like $20 a trade. But that's just let you sleep at night completely because you're trading such small size. So anyways, I totally got myself off track, but basically this is the strategy that we use. It's called bounce strategy, and it can be used again in this hyper aggressive way where you pass the prop in 2 weeks, and now we're just doing it in a much more creative way where we pass the prop in 10 weeks. because I want to give people the opportunity. You know, not first some people are much more comfortable with high risk, other people are much more comfortable with low risk. Also, people, you know, have different time constraints. This is a very relaxed strategy. You can trade it 2 or 3 hours a day, and you're done. You know, we're just trading it basically 6 in the morning till 10 in the morning, and you're done. So, you know, there's lots of different ways of how you can do it. But the whole idea is to create all of these very robust, very battle-tested, real market strategies that that can help people pass the surge prop test and, you know, hit the targets. I also believe that if you follow this approach, when you go into real money, you obviously have a much greater chance of success because you're naturally going to have a very low volatility strategy.
Develop some good habits.
You develop some really good habits. Exactly. It kind of forces you to develop really, really good habits, you know, in that fashion. Anyways, we'll do a little bit of market analysis. We're gonna go. I'm on a daily, right? So let's go to gold.
Perfect. Thank you.
And you know, and again, gold is still in a quagmire. Gold, in my opinion, is still sort of. There's nothing here that suggests overwhelming bullishness. But there is something that suggests modest bullishness, and I will say this is where Francis may be right. Let me just kind of highlight this. This is daily chart, and what you see on the daily chart here is a series of lower highs. I mean, you know, I'm not doing a very good job annotating anything, but you can see pop, 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 right? And really, if we don't break
Sure.
the 1900 to the downside. Like right now, you basically have to be long gold with a stop around 1860, maybe 1870, right? And if the stop doesn't get taken out, you're going to be in the right position for a possible run. Now, the thing I think that will shock everybody is if we take out the 2100, because nobody's expecting, you know, fresh highs in gold. And I think when it gets fresh highs in gold, that's when you might have like a whole snowball effect to the upside. So to me, gold right now is definitely, you know, it's either a short where you just simply say, I don't care whatever it's doing here, it's not gonna break the highs, and I'm just gonna stay here to the highs. Or I think a much more intelligent trade here is get long because your risk is relatively small, and if you're right, you're just in a very, very good positional trade for, you know, for an upside. Remember oil? How we loved oil at 65. As a matter of fact, look at this. Look at my old. This is everybody proof of the fact that I loved oil, because this is all just marks that Corey and I have had on the charts for 3 or 4 weeks ago, where I said oil was just definitely a great buy at 65. Well, we're now getting into that. You know, I said it's a 65-80 range, so we're definitely getting to the high end of the range. Now is not the time, I think, to really chase it aggressively, but it may have a little bit more upside, you know, potential here. So, but gold, you know, but the big move was we already had that big move. You know, we like that move. Now, if we have a macro situation where, I don't know, Russia goes offline or something, you know, we have some kind of a squeeze in the oil market. I can't imagine what it is, but if we do, yes, you know, then we can start to, if we break 85, you should be paying attention. You should be paying attention to what's going on here, because that's a different story. It's now becomes a much bigger turn in gold. But for now, it was a bear market bounce, and it was a great bounce to trade on that side. You know.
All right, guys, I'm sorry. I have to get out of here. My sick child's patience is wearing thin. But, you know, Boris, if you want to go over my heat map, you can feel free to.
Thank you so much.
All right, it's my pleasure.
Thank you, Kay. We'll
Have
see
a great
you
week.
later. Okay. So
Thanks.
you know, so that's a story. That's a story with that. And then, you know, if we look at the indices, I mean, NAS is, you know, just this is daily NAS. This, I think, to me is actually a reasonable short. Okay, and because and by short I mean like a corrective phase. I'm not saying that, you know, that we've hit peak. You know, bull market. But first of all, look at the parabolic moves. Whenever you have these kind of huge parabolic moves, right? There's almost always a little bit of digestion, right? So I think at very minimum, we are sort of a 15,000, 16,000 top, right? In NAS. The interesting thing here is, you know, everybody loves to look at Apple and Microsoft, you know, the four horsemen of the apocalypse, Amazon and Meta, as this tracks. To me, sort of, I think that the really hot sentiment stocks is Tesla and Nvidia. These are the truly degenerate, degenerate gambler stocks, because obviously
Sure.
video, the AI, and Tesla, it's going to save the world, and they have peaked. So unless Tesla and Nvidia start to make fresh highs, you kind of have to believe that there's a little bit of a peak in NAS, and it's much more of a sell the rip than buy the dip kind of a story. It's still, it still could be a pretty decent buy the dip, but it's got to come down into that 14,500, somewhere around there. So those are my sort of big macro views on everything. We'll see what we can take a look at dollar yen. Always my favorite FX kind of a pair for what we think. Really, honestly, that's a pretty big turn, right? I mean, Jesus, look at this.
Sure.
Every dollar bear just getting their wings clipped. But I do think the Fed, my view is that if the market takes what he says as this terminal rate, I think that's really going to be the story this week. Is this terminal rate or not, right? And if he makes it more or less clear this is terminal rate, that we're kind of done, we'll probably start to see a little bit of drift back down to the 30s, 39s. That's going to be a very interesting trade. If there is sort of categorical refusal, like if he really genuinely communicates that no, this is not the terminal rate, and I'm going to go higher, then I think dollar yen can go higher. So I think that's sort of going to be the big story of the week. Is this the terminal rate or not? That's
Right.
That's the TLD. That's the investment TLD.
Yeah, right. Exactly.
Yeah.
We're looking for terminal rate talk.
Exactly, terminal rate talk. So
Awesome.
so that's pretty much it as far as the market goes. Obviously, going to be a lot of very exciting stuff. Although, as usual, my fair warning: we're not trading Wednesday morning because it's FOMC day. Just don't get torn up in the chop. Don't waste your time in the chop. That's that was the other.
Not
thing.
trading in the room, or you're not trading at all?
No, we're trading post FOMC. We're not going to trade the room, and I'm really not going to. I will trade just the beginning of European session, and that's it. And that's it.
Okay.
But if you guys want to come join us in the room, just go to come to us. We have come to our Surge link. I'll be happy to post it.
Yeah, we'll put it in the description as well.
Yeah, just literally get yourself a Surge eval, and you get the $200 signal service per month that we do, including my live trading, including my strategy, where every day I'm literally getting closer and closer to passing the prop test. So, and I teach it to you, and I give you the tools. So it's really, really valuable. Like, this costs you nothing. Like, would you rather take a Surge eval and learn nothing, or Surge eval and trade with a whole bunch of professional traders?
Right,
and learn
absolutely.
a whole bunch. Like, what kind of that's your deal. Why would you want to do that? Come take a Surge eval through us, and you will get. Surge has been very, very kind to basically make our service totally free to you guys. So definitely come by. We'll be happy to do that.
Perfect. Well, Boris, thank you so much. I know Kathy had to run, but I thank her as well. And we'll see you next week. I wish you all the best with your trading this week, and we'll touch base and,
We'll
see
what
what these
dust
calls
settles.
look like. Yeah, exactly. Right.
Exactly.
Right.
Thank you, man. Take
Awesome.
care.
Have a great week.
You too.